Hey, what's up traders? It's Victoria from TRADEPRO Academy, and today we got another special video for you guys. I'm going to be breaking down my favorite A+ setup. Now, this is a setup that is based on auction market theory as well as order flow that helps me understand the directional changes in the market based on the use of the prior regular trading hour session in the futures and the current overnight session that trades. So using these two concepts, what I can do is break down a directional shift in the market so I'm not constantly trying to look at what happened the prior day and try to follow through. If the prior day was a big sell, I don't want to keep selling if there's no reason to. So this A+ setup happens honestly a decent bit of the time, but when it does, I make sure that I'm on board this. Now, the best news about this video is that these setups, as well as my full trading system and strategy, is now in blueprint PDF format. Meaning, I've created a PDF for you guys that breaks down exactly what I look at, how I look at it, and how I trade, and you guys can get access to that, right? There's a link down below. It's 100% free, right? All you do is you drop an email and you can get that blueprint. So one of these strategies is based on the information that's in the blueprint, and you can find it in there. And this is the video format to explain exactly how I did it, along with some trades around this A+ setup. So if you guys are excited, drop a comment down below, check that blueprint out, and I'll see you guys on the other side after this intro. Hey, what's up? So we're back at the computer here. As you saw in the intro, I'm going to be breaking down pretty much my favorite A+ setup when trading futures. I'll be breaking this down from the S&P 500 perspective. And honestly, throughout the month of August, I haven't really traded minis that much here and there because it has been a tougher month. So I've been sizing down significantly. But the few trades that I did take, I'm going to show you because they came apart based on this A+ setup. Now, this A+ setup is based on auction market theory as well as a little sprinkle of order flow. So predominantly what we're going to be looking at here is going to be this larger volume profile chart, as you've seen with a lot of the videos here at TradePro. This A+ setup, it revolves the failed acceptance of a balance. So what I mean by that is if we take the understanding of just general auction theory balances and value, right? If we take a look at what's going on here, if we understand that, let's say two of these areas like this are balanced regions, right? These are going to be our little examples here. So let me see if I can move this actually. I'll just move it like this. So if we take an example that both of these are two key balanced areas, I'm very focused on how prices actually close and reopen based on individual sessions, taking into consideration the extended trading hours and the regular trading hours. So based on auction market theory, one of the first things that we understand is that we want to find an arrow. So one of the first things that we understand is that when we're inside of an auction area, inside of a balance, price tends to stay within that area. Price accepting into balance wants to sustain that balance until proven otherwise based on new information that could be entering the market. So this strategy revolves around the failure to consistently accept into a balance. So what is balance acceptance? What is value acceptance? I look at it from a larger profile perspective, from a 200-day or 100-day cumulative volume profile. And I want to see the RTH close within a new balance. For example, if we're running a downside move in the trend on, let's say, today's session, right, or last week's session, whatever the case is. Let's say today's session, we have a large downside move in the markets. And there is a big value area, a big balance area that's accepted to the downside. So this like arrow, we move into it. What that tells me, because typically these areas, if we understand that both these boxes are two heavy balanced regions with a lot of high volume nodes that create these bellies, if we understand that that's the case, right, what happens in this scenario is that there is a lot of sell pressure, not only to accept in an area that has such heavy volume from the upside, but also to stay within that area. So if we close the RTH within this region, my expectations are for prices to fail at the tops of this area, right, to continue that downside momentum and eventually move to the downside. Now, the strategy that I like, this setup, it doesn't happen all the time, but it's a very, very high probability, is that on the RTH, when we get the move down into a new balanced area, and we close down there, on the ETH, if we escape, right, the overnight session, if we escape and actually move into another balance that was higher, right, in this case, right, a prior balance, that gives me the notion that I am a buyer at the bottom band of that new accepted balance. So my A plus setup comes from trying to buy the lows of that newly accepted balance, because if the ETH, the new ETH, actually closes within this new accepted balance, and we reopen the next RTH within that accepted balance, what that tells me is that this was failed selling, and we're expecting to see that upside continuation. The first move that I'm looking for is going to be the hold of the low of that area from that failed balance acceptance for me to get long into the upside momentum. So if we erase this, right, it works the same way realistically on the other side. If we get an accepted move to the upside, right, which happened today as well, I'll show you both scenarios for the bull and the bear. But if we get that accepted move to the upside, for example, right, and we get a nice little push and prices close the RTH in that higher auction to the upside, but on the ETH we pull down and the ETH closes within this new lower band balance, the idea is for me to sell the rallies into the top band of that balance, which gives me directional confidence to the downside, especially if we actually manage to break below this distribution region. So if we look at how this shapes up on the actual charts here, on the actual market, it might make a little more sense. And we'll use the footprint to help us with the confirmation of these areas as well. So if I'm looking at this, right, I'm going to show you two instances that I actually did trade these, and one instance where I didn't, which was today, and I'll show you why. So if I'm looking at this, it's a prime example from the 22nd into the 23rd, right? This is one of those trading days where when we look at this and we can see that we have a pretty significant balanced area, right? A distribution down here from 56.04 area all the way down to about 55.70. So what price does on this day, we get a very strong move on the RTH here, and prices actually close. The red marker here is the close of the session. We close down below. So theoretically, right, you're going to want to look for that continuation of the downside. The thing with auction theory, right, is that markets move from balance to balance. So when we are inside of a balanced area, prices want to sustain that balanced area, holding the rotations within, because it's an area of very heavy volume. It's harder to escape unless there is some kind of catalyst that creates more supply or more demand that creates that move outside of that balance. Now, another factor is that when we enter into a balanced area, when we enter into one of these distributions, if we enter from the upside to the downside and we close within that area, even on the intraday, I'm expecting downside momentum to continue, right? So I want to see these guys fail at the top of this area and continue to the downside press. Now, there are a few criteria that would have helped me kind of anticipate that there's going to be some kind of structural change and a move back up. But realistically, I'm just going to watch what happens on the ETH and play it off those rules. So here you can see there is heavy volume into the lows, which is a catalyst for a turning point. If we move back above this balance, right, prices are expected to start turning around. However, I'm going to use this, the understanding of these distributions, right? If we grab this 20 area all the way up to the 48, this is where the larger, higher band balance is. So I'm going to use the understanding of this for me to actually have an A+ setup throughout the actual trading day. So I can look at this on the overnight and I can think, okay, well, realistically, I can take an overnight trade as well. If we start moving above these areas, I want to be a buyer at these heavy areas of volume on the individual session. But if I want to just wait for my setup, I'm looking at prices on the ETH close back within this larger balance, this larger auction to the upside. So I'm looking at this thinking, realistically, with that acceptance, we should hold the bottom band of this balance. And it works both ways. If this happened to the upside and failure to the downside, great. So this is the failed acceptance from an RTH into an ETH, which gives me the confidence to transition to the upside, at least for the initial move in the market. So at this point, I'm going to be looking long around this like 20, 22, 24 area to see if I can hunt some of that upside momentum. And if I take a look at how that was done here, take a look at the actual chart itself. So during this time, so we get this move down, and it actually holds that 20, which was a mistake from my end, where I should have been getting into that long realistically at that point. I tried to get it a little too soon into that 26. I got stopped initially, then I had to re-enter at better areas for this stronger move to the upside. Because if we look at this, this is where this balance realistically has been created. When we accept back within it, and we close back within it after a failed acceptance to a lower area, there's about like a 70% probability that the first move is going to be in the direction of that new acceptance, which is this A+ setup that I find very, very lucrative. Another tool to add to this is going to be order flow. So when I look for confirmation from order flow, I'm going to show you guys the footprint in a bit, but you can see over here, this is the exact situation where we have delta. Delta helps me understand where these imbalanced areas are. So you have a heavy buying from the prior day as we close into that area, meaning that if we can bid back above that, the buy side is going to be strong. This is the overnight session. What do we notice about the overnight session? There's a looming massive, massive delta that's stacked up right here. Huge, massive delta, which is literally the lows of the next session morning, right? So the morning session of this move, the IB low. So that massive delta is a huge imbalanced buyer that's helping me get on side of this. So realistically, like I was a little early on this move, or I guess late, if you will. But overall, if we take a look at how this footprint shapes up, we'll talk about how that entry was actually created. So let's take a look at the footprint and understand what's going on from a order flow perspective. We get the initial drop, and we have a huge buyer that comes in, big positive delta that steps into this. And realistically, so we take a look at the footprint, we can see a little more from the order flow perspective where the big buyers step in. So as this thing opens, it pulls down, a massive buyer steps in, a huge positive delta at that 21 and holds a rebid. Realistically, those are areas that I should have been looking at, because we pull back up, you have massive buyers that come in here and kind of get rejected. So they're getting a little trapped into these highs around that 27. So I got long, right, a little premature, I guess, around 25, took a stop on this, pretty much a low tick. And I decided to get long again around that 24, much better area realistically. As long as my stops are defended under this massive buyer, I think the entries are fine. I don't necessarily think that this massive buyer gets traded again. And if it does, right, then I'm probably going to have to try it again. Once these big buyers clear up, right, you get that larger expansive move to the upside. And there's your pop, right? I didn't hold it out for this full move, but you have this nice little pop. So these failed auctions turned into reversal auction acceptances are the pretty much like the main setups that I try to hunt if it's applicable. So realistically, it's not always going to be applicable. I'll show you one other instance, and then today's instance that was very, very similar realistically, but I didn't take the trade, and I'll explain to you guys why. It gives you a sense of directionality and also the actual setup and area where to trade. So let's look at the 29th. That's when it happened again, right? We got a significant downside move here on the 28th, right? So let's draw our large value areas, our large distribution regions. So we have a block here, right? I could have just not deleted the prior ones. And then we have a block over here somewhere, right? Something like this. So realistically, similar situation going on. So we get this larger significant move to the downside on the 28th. We accept into this balance to the downside, this auction. And realistically, we should sell rallies into the top of it, but I want to see what happens on the overnight, because if the overnight changes and it flips again, and you can see here, we close the overnight session at 56.28.30 area. So we actually accept above this 56.20 distribution bottom, where I'm expecting the buy side to hold. So I want to hunt where the longs are at that point. That's my setup. The first test of that area, once we accept into that region, is going to be my long. I don't want to wait for 15. I don't want to wait for 15 tests. I want to be on those first tests to continue that momentum move to the upside. So if we take a look at where that is and how that transpired on the 29th, we can see that this is the open where it gets darker background blue. We get a nice little pop. So obviously I wasn't fast enough to get that first pullback. It comes down. I try to get long right at that same area around that 26, and I made a little mistake. I didn't wait for too much confirmation. I got stopped out of this and then re-added into this at this 25, and then took some profit, added again into it at that 22, and then this stronger rally happened. So realistically, as long as my stops are under these regions, and I'll show you on the order flow front, I think maybe this add was a little aggressive. But overall, this area, as long as we're holding above that 20 region and we're trying to bid around 2024, I like that move because we close the overnight session above within this balance. So the first potential long is that shallow pullback to continue the momentum to the upside. That's my A+ setup, and it works on the downside as well. Let's take a look at what that looks like on the order flow front, and then we'll take a look at what went on today as well. So on the order flow front here from the footprint, you can see that realistically what I want to see if I'm trying to get long is some kind of heavy buying against the selling. So like you can see a lot of negative delta here, but for me it's like more of a two-touch test slash seeing big buyers come in. So you have like a lot of this like negative delta, big selling coming through, and I'm getting in right when this like big seller drops a pretty big offer. Realistically, you see where these like big buyers come in and they sweep prices up, which is at 24. That was a better entry on this move. I got stopped out of this one pretty much at the low tick realistically. And then over here, I'm getting in where the buyers originally came, and you can see people are stuck on the short side. They make a nice little push. I'm taking about like 6-7 points on the first initial move. It comes back down, and I see a massive seller getting trapped again. So I say, you know what, like realistically, I don't have to get out of this trade. I think that this is a higher probability if I actually add or have like a second position if I was out of that trade originally. Now we pull down, right? They get trapped here, massive negative delta at the 22s. It looks pretty good. They keep pushing up against it with some buy side, and I say, okay, this is a decent area to start looking for these longs. And you get this nice little solid move to the upside realistically. And again, I didn't hold to the max extreme, but getting a very, very high probability move out of this. This works the same way if we extend these a little. It works the same way to the downside. So let's look at this specific situation that happened here overnight yesterday. So yesterday, we get the acceptance outside of a heavy balanced area where we have low volume. Realistically, what happens in these conditions is that prices in these low volume areas are expected to continue the momentum until you hit another balanced region, right? It's pretty bullish at that point. Unless, right, we accept back down into a key balance, because if we move back into a heavy key balance, that tells you the sell side's strong. This is a heavy, thick volume area that puts a lot of pressure, and if the sellers can put movement into that and close within it, reopen within it, it's a sell day. It's a downside move. So we get this failed acceptance, right, from the prior days. You see multiple days close above this region, and today we close back within the auction. So my thought process realistically is, can I sell the top band of the auction, or can I sell the break and a retest of the lows? So I found it a little more difficult to get in on this move today, and I'll show you why, because the pullbacks weren't that opportunistic. Instead, I kind of waited for a different setup that's based around the IB low and high excess move. But based on this specific A+ setup that I have, I think it was just a little difficult for me to get in on this trend today, or I guess at the beginning of this trend today, and I'll show you why. Because this is where we open up, right? We have the level either at 28 area or at the 20 that I could sell into. So this is how we open up. It just starts going right away. Little chops and movements around, and what happens is right away they start selling. I guess I could have gotten this pullback into this 5620, but I think it was just very shallow drops and pullbacks that kind of were a little aggressive for me, so I didn't really jump into this, and we got this like larger downside move. But it is considered an A+ setup. Instead, I was playing around with NASDAQ in a very similar fashion, but it looked a little better in terms of the pullbacks that were coming through. So again, if I'm looking at this setup, this doesn't happen all the time. It doesn't happen every single day, but when it does, and if it does, there's a very, very high probability that you're going to find a very sweet entry and reversal. So it's based on reversals of the prior day's trend momentum move on balances. So if I'm entering a new balance to the downside, or in this case to the downside, let's review this. So if I enter a new balance to the downside, right, we have this larger balance that sits like this. So from 55.65 all the way down to 55.20, pretty much the lows of the current move. So we've entered into this. Theoretically, we want to sell rallies into this. If I wake up tomorrow and prices are trading 55.90, I want to buy dips into 55.70. That's my A plus setup to see this continuation back to the upside, right? It's the same thing as today. We get this like fake move. We close back below this auction on the ETH after the prior day's move higher. I'm looking for that reversal to the downside. So like I said, it doesn't happen all the time, but it's a very high probability setup that can keep you on side based on these balances, rather than seeing a massive down day like today, and tomorrow if we open up 40, 50 points higher, you trying to sell every single rally, and next thing you know, we're trading at 56.25 again. Not that this is going to happen, but when you watch this video, let me know what happened on September 4th, I guess. So on September 4th, did we get that kind of setup? And if not, that's fine. I don't have to keep buying this, and I'm going to be looking for the continuation to the downside. So if you want to see more of these setups and A+ setups, drop a comment down below. Let me know what you think, and I'll add more of these to the repertoire with confirmation. So don't forget that we have the blueprint to trading futures, which covers a lot of these and exactly my trading strategy and what I do. And you can check it out at TRADEPROacademy.com. You can see it down in the bio down below. The link is there. Go check it out. And it breaks down exactly how I do these. And all you need is an email. So I'll see you guys later. We'll do this again in new videos. Let me know what else you want to see. And take care.